My fellow traders, what's happening? Hope you guys had a great day today. Yesterday I was out, had some business to take care of, so I can get our small account fund members their money this weekend. So I had to meet with my attorney and get all that paperwork closed out for second quarter. So I took yesterday to do that. I did mess around early. I had the Apple trade from the day before, the 100 shares left from the earnings trade, and the Logi trade. And those two I closed out, made some pretty decent money on it, but turned around and got stuck in TDOC the wrong way and ended up losing a couple $100 yesterday when I really shouldn't have been trading. If I had just not taken the new trade, just closed out Logi and Apple, I would have had a $600 day. But in turn, I turned around and knowing that I couldn't give it the focus, and just made that dumb mistake and turned a really good day into a bad day. But I realized the mistake. It was all me, and I accepted, and we moved on. But today wasn't the best of days, but I got what I could, and that's all we can do. I stayed consistent, did what I was supposed to do, and moved forward. But today we're doing another building consistency in your trading segment. So that's going to come right after we do the recap for the day, and I'll move right into that next segment. So the SPY pretty much did exactly what we're looking for it to do. Hit the top of this channel, and we still don't know, is it going to press it, or are we going to sell off here? That's the $1 million question. I'm thinking we're going to sell off from here. That's my opinion. We're going to test the 20, I believe. May even come back and test the bottom of this channel and the 50-day. But that's kind of what I'm looking for. The bulls are still firmly in charge. The market needs these little micro pullbacks in order to keep trending up, and I think that's what we're still going to do. I think it's going to take a serious issue to tank this market again. Even the onset of this Delta variant and how it's affecting the large pockets of areas in the country, it's not affecting the market right now. So I'm thinking we're going to get another little pullback and back up to new highs. It's kind of what I'm looking for. But tomorrow will tell. I believe we're down after the close. So, but I honestly think we're gonna have a pullback tomorrow. I mean, that's my interpretation based on reading the candlesticks here. So QCOM was the #1 watch today. Actually, what stock was that? I can't remember. Golly, mine is bad. Mine is a terrible thing to waste. I had another stock on earnings this morning that I was watching, and I can't remember what it was. Might have been AMD. I can't remember. But the other stock that was on earnings I was watching, it tanked pre-market pretty much took up the whole trading range. No, it wasn't AMD. It wasn't. AMD was a good one today. I can't think of the damn stock, but if it comes to me, I'll bring it up. But that was another one. That one took off early, and so what I did was I just tried to focus on the next one. I think it was OSTK. Yeah, OSTK. It had a pretty wicked spread anyway. So it pretty much took itself out of contention, early. So I went on QCOM and it broke. This is the pre-market high. So once it broke the pre-market high, I'm getting in. I'm getting that aggressive first move. Or that's what I'm trying to get. That's the move I got nailed on TDOC yesterday. And I had to walk away for a minute, and I looked on my phone and I was like, oh shit, and I had to bail out of it. But it was one of these, just one of those deals. No strategy is going to work every time. It's not. But this works more time than not. You don't know the sequence of events. It could fail 3-4 times in a row, and it could work 6 times in a row. I mean, you just don't know. But I'm just be consistent with this. It broke it, hit the first target, didn't quite make the second target up here. I had it at 149.30. Didn't quite make it, and we pulled back and stopped out at break even. Then we fought back up, ended up getting in again, but guess what happened? This is the profit target. This is the limit order that I accidentally left on from this first trade, because this was the second trade. The second profit target was here. When this got stopped out, I didn't close this order out, so when I got in, it went up and hit that order, and it triggered. That's why it sold 52 shares. So that was a dumb mistake on my part. So I could have actually taken profit here, but because I kind of short shifted this, I messed up and ended up couldn't take profit here. But when it started to roll over, I killed some. I talked about it. I will get the recording uploaded, but in the live webinar, I did talk about it, what I saw, why I went ahead and took profit here. And it was all a product of what we're going to talk about today in reading price action. And then, came back, had to stop out at break even. And here we got up again, and we just couldn't make it. Telltale sign that we were just kind of failing. So it came back and hit my stop. Wasn't a max loss stop. This was a technical stop. And you see it just kind of teetered around again. And then once we took out that level, we got back in again, hit the first target, which was this daily level here. And it kind of rotated from here. So I'm taking 2/3 off at the first target because we're not really getting a lot of follow through. It's what happens in the summertime. This is not uncommon in the summer to not get a lot of follow through. Every now and then you'll find stocks to follow through, like AMD today, kind of follow through all day. So had I been on that one, that would have been an all day run. You'll see I'm trying to get back into the all day holds, trying to see if the market's gonna work with these. I did take TDOC today, maybe subconsciously trying to get some of the money back from yesterday, but we'll look at that in a minute. But you could see once this trade ended, we practically traded sideways all day. If we did break down after the close, but who's going to trade in this support here? It's not a clean trade. So there were no other trades on this stock unless we broke the high here. Over 150, 150. It never came back. And so we were done with that. So a lot of hard work on QCOM for very little money. Only 245.42 today. So, I was in Speed Trader today because I had to, with TD, that's the one I use for TDOC, trying to get that money back from yesterday. So this one I had to trade with Speed Trader. So we had a little bit more commission than normal on what we, like if we used IB or if we used TD. But it just seemed like I fought all morning for a few pennies, and some days it feels that way. I mean, it is what it is. TDOC, this is the all-day hold. Got it pre-market here. This was actually an accidental entry. I was trying to type in and was setting up the montage so that when it broke and it went green, I was gonna take it. But since I was in, I just let it run, and you could see it just worked. It wasn't clean, but this is what all-day holds do for you. You just get in it, set it, and let it work. And if I was watching this like we normally do, if we're in a trade and we're watching it, I probably would have stopped out here because it didn't hit my first target. My first target was 156.25, which was a little over $5. And I mean 156.50. And it didn't get there. It got to like 156.25 and it pulled back. If I was sitting here watching this, I probably would have killed this trade. Definitely would have killed it if it came all the way back down here. But you can see, technically, it never took out the technical level. It stayed green on the day. And we never really broke long-term trend. If I was trading this on a shorter time frame, it would have prompted me to take it off because it probably would have started putting in a downtrend. But it just continued, and we got the first target. I still got this last piece on. We could get a gap up tomorrow. I doubt it now with the market selling off. May have to bail out first thing. But I'm thinking we're going to start, especially next week, I'm going to start looking at having an all-day hold. Definitely swing trading. I'm just holding bags right now with Disney. Well, SQ already went out break even, but not SQ, but Disney, we're still waiting for that to explode up to 200. I'm still looking for that. May not happen now that we're seeing this increase in the variant. But that was it for today. So what we're going to talk about today in our building consistency in your trading. Okay, we built the all-important foundation. We framed out our trading house. Now it's time for us to start building it out. The first thing that we're going to look at is reading price action. This is critical. This is 100% critical to you building confidence in your trading. because now you've done all the groundwork. It's time for you to build confidence in your trading, your process, on your execution, and that in itself will lead to above average discipline and helping you manage your emotions. And in that case, you would have turned these weaknesses into your strengths. And once you are able to read price action, then we can start adding some other strategies that may be a little more subjective. You could use your price action reading abilities to help you, enhance your trading. That's where all of this is coming from. And that's the direction that we're going to be taking. So if you know anybody, I need to put all these together, and I will in a folder on YouTube, probably Sunday. But if you know anybody that could use this information, share it with them. That's what it's there for. A lot of traders can learn strategies. They make winning trades. It kills me when I see people post their days and say, man, I made my membership fee in one trade. Well, that's great. But the litmus test, the real test, is at the end of the month, are you able to pay your membership fee? Are you going to have that at the end of the month? It's not about making it on one trade. It's whether can you keep that money in your account so that you can pull it out and pay your bills at the end of the month. That's your test. If you can't do that, you probably want to start listening to some of these things, because I guarantee you I can figure out where you're falling short and show you just how to get to the next step. And that's what this is all about. So today we're at stop 3. These are stops on the road to your trading success and building consistency in your trading. So stop 3, the first stop is on stop 3, the first exit, reading price action. So we're going to talk about what price action is, really simple. How do you use it in your trading? Basic candlestick formations. I don't know why I got 2 Ks on candlestick. That's funny. And the power of price action. This is going to take probably 2 sessions. So I'm only going to, there we go. It's probably going to take 2 sessions. So we're going to do one this week, finish up next week. So what is price action? It's really, really simple. All we're doing is we're looking at price movement across a specific period of time. The movement of the price of a stock from one candlestick to another. That's basically what it is. Or we're also looking at the price movement of a stock within a specific candlestick. So you see I have a 5-minute chart and a 2-minute chart. If you're in the live stream every day. And the 2-minute chart is telling me what's going on inside that 5-minute chart, that 5-minute candlestick. So I've got a good idea of what's happening. But it doesn't matter what time frame you use. Each candlestick is going to tell you what's happening from tick to tick as far as the price action is concerned. And those candlesticks tell a story. All right, so how do you use price action in your trading? This is where the rubber meets the road. This is where people get confused and have to kind of figure things out. Is no 2 people are going to analyze every bit of price action the same way. Now, I've said this many, many times. Trading is like an art form. Okay, nobody is going to look at trading a trade or a chart or anything and get the exact same feel from it. It doesn't happen that way. So what you have to do is develop you. And that's one of the big goals that I have, especially in the ones that are taking advantage of the mentoring, is trying to get you to understand who you are as a trader and to really understand how you see the chart and be able to interpret it and trade it so that it fits you. All right, so many new traders, they come in and they hear price action, and sometimes it's portrayed to them to be complex and elusive so that somebody can sell you a course to teach you how to read it. You'll see how simple it is. And a lot of times people don't believe it's that simple. They think it's harder than it really is. And that's another issue in trading. We try to overcomplicate things, but it's not. Interpreting the price action of a stock is completely subjective, and it should be just one of the many factors that you look at before and during a trade. If you're looking at a stock and it's putting in some weird candlesticks, the price action sucks. And that should tell you ahead of time you probably don't want to get in that trade because you'll get chopped out. And we're going to look at this here in a second. So the way, some people, what they do is they group candlesticks together to form price action patterns. And they use those patterns to help them determine what's going to happen next, or what's likely to happen next in a trade. Now, I'm going to tell you something about these patterns. If you have TD Ameritrade, or Thinkorswim, and there are other charting software that will allow you to have your chart identify patterns for you. All right, so think about the algorithmic traders. They can program their they can program their software to look for these and trade the opposite of what we retail traders expect the trade to do. So if it breaks a triangle or breaks a flag or a pennant or whatever, they can start selling once the triangle breaks if we're going long. Or they can start buying if we short it, if we short a bear flag. And that means they have a lot of shares that they need to get rid of. They dump them, and then maybe the stock comes back and it makes the complete move. Or maybe they're underwater and they need to try to get people to hold this stock up. And they don't want it to go, and they know that, hey, retail traders are going to buy this flag break. They're going to buy this pennant break or this head and shoulders break. For me, I trade channels, which is not so much a pattern, but some people consider it a pattern. That's why I have it up here. But to make a long story short, they can program their platform to take advantage of what we do. And that's why you rarely see me talk about this. I draw them and I say, look, here's a triangle, but we need confirmation. And normally when we wait for confirmation, we don't get caught up in whatever mess algorithms have at a certain point. So confirmation kind of takes you, keeps you out of that mess. All right, so here are the basic candlestick formations. In essence, this is all you need to know. And we work from this. Okay? The most bullish candle down to the least bullish. This is the most bullish because this is solid. That means the candlestick opened here. It continued to trade up. with no down ticks. The most bullish candlestick you can run into. Here's the second most. That means this opened, it sold off, it hit support, it got bought back up, and it closed at the high. That means this candlestick closed very bullish, and we're likely to see more upside. This is just a regular bullish candle. This one is, the body is mainly green. It's a large body. We closed near the highs. So this is just a normal, regular bullish candle. This one is neutral, which could be considered a doji. It's just that we closed just a hair above where we opened, which made it a bullish doji, so to speak. But there is indecision. You've got a big sell to the bottom and it got bought up. You got a big sell to the upside and it got sold off. It's just that it closed green. So it's basically a neutral candle. It's not bearish nor bullish. And this is the least bullish. This means we opened here. We sold all the way up. But coming into the close of this candle, we sold off. And this candle closed very bearish, or very weak. So this is the weakest of the bullish candles. And here, this is the doji. This is where we open and close pretty much the same place. This is the ultimate in indecision. So we call that the doji. And here, this is just the opposite. The most bearish, the second most bearish candle, a normal bearish candle. Here's another doji. This just happened to close red, but still indecision. And here's the least bearish candle. This tells me that we sold off. We found support. It got aggressively bought back up. And this candle closed on the strong side. Typically, we see this on a bottom reversal. These types of candles. These we typically see on a top reversal. Or when we start to see a bunch of these, if we're selling off, and we start to see a bunch of these with long wicks to the bottom, typically we're starting to see a trend change. All right, so this is the basics of reading price action. You're reading the candlestick. That's all you're doing. You're reading the candlestick. And we're taking that and we're looking at what's happening in the chart. Now I'm going to bring up a chart here. Let's bring up let's bring up the QCOM chart. Let's do that. All right, so let's take a look at what happened today. Here's the first 5-minute candle. Huge candle, big range. Look at the wick to the top. Practically no wick to the bottom, wick to the top. So this is kind of a normal bullish candle, right? So the next candle, we have a typical bearish candle. We have a little wick to the top, a little wick to the bottom, typically bearish candle. And then the next candle, a pretty decent red, green candle, or bullish candle. We have a longer wick to the upside that ran up to a level of resistance and pulled back. That's normal. Okay, that's 100% normal. But look at the length of these candles. Look at the range that these candles have. This is telling me that we have a lot of volatility in this candlestick. Now, the volume kind of fell off, but it still has some good volume. We still have some good volatility. So to me, that tells me this thing could, make the big run up like I want it to. All right, but this thing chopped this way up. So here we've got 1, 2, 3 candles that practically closed, the top practically closed at the same. This one pretty much opened up here. These two closed up here with big wicks to the long side. We don't know. We have to be a little bit careful here. So my technical level is this opening range high. If this candle closed below it and the next candle took it off, technically this trade plan is dead. All I'm doing is reading the price action. The price action is going to tell me if my trade is dead or not. No indicator, nothing. The price action. And that's why it's important to be able to read price action. Because if you sit here and just let things hit your max loss stop all day, it's going to cut into your profits. You'll be more than likely ending up close to break even at the end of the month. You have a max loss stop, but that's not there for you to let the stock hit it all the time. You have to use price action to let it determine, hey, this trade is dead, we need to get out. But that didn't happen here. We held it, and I was able to, this stopped me out back at break even. I was able to get back in. Look at this. This is a really strong candle here. We closed at the high. And what? I don't know if you heard my cat. But we closed at the high. This was a very bullish candle. So it made sense for me to buy it once we cracked, the top of this level here. And it ran up, but look, it got hit. Look at this candle. It got hit. We got bought back up, could not make a new high. But I had to stop out because technically this told me, the price action told me we were stuffed here. All right, but let's zoom back out. What is this doing? What is this telling us? Okay, we've got, I can extend this out. This is the top of this range here. And so, as far as I'm concerned, this put in a channel. You see that? That's the channel. You could call this a flag. You could call this the flagpole. You can call this the flag. You can draw this and make it a pennant. You can do whatever you want to do with it. I'm looking at this channel here. And this channel, to me, I'm looking at it. All of this is somewhat indecision. Green, strong green candle, strong red candle, a normal green candle. Oh, here's a strong red candle. All right, and here's a normal red candle. Here's a strong, a bearish, a bullish candle, bearish, bullish, bear, bullish. This is just trading sideways. We're trading sideways in a channel. There's no direction here. The only direction I'm going to get is when we break the top of this channel. Now, yeah, this is starting to show us that we're getting bullish here. But until we break this and we break out of this channel, there's nothing there. Once we broke out, that's when I grabbed it. Because this is telling me, the price action is telling me we're going higher, likely to go higher. Next level, great profit target. So, bam, that's the trade. Now, yeah, unfortunately, it pulled back. We got stopped out at break even again. But, that's it. That is how reading price action can help you, and it's powerful. It will keep you out of bad trades. It will help you clean up your trading and make you more consistent in your execution if you're able to read price action. it will keep you in trades versus you bailing out when you're not supposed to, or getting spooked out, or holding past when you're supposed to hold. It's going to help you do a lot. Now, in learning this and me teaching this on a dead chart, it really doesn't make a whole lot of sense. You could say, well, you know what it's going to do. It's happened already. I didn't know it when I was trading it. I was reading the price action and letting it tell me where this is likely to go and if it's going to set up for my strategy. And the price action supported the trigger on my strategy, so I took it. And it worked. Sometimes it doesn't, but most of the time it does. When you're consistent with what you do, at the end of the month, you put money in the bank. That's what it's all about. It's not about making good, solid individual trades here and there. It's about executing at 100% accuracy every day, all day, and at the end of the month, put money in your bank. Doesn't matter whether your trade lost or whether you have 5 losers in a row. If you execute the way you're supposed to and you have a winning strategy, you're going to do fine. All right. So I ran about 5 minutes over today. I tried. That's why I didn't want to cover everything. But next week, should be able to have some live clips. Really, if you watch the live, if you watch me trade live every day, you'll learn what I'm trying to teach. Now that I'm recording the morning sessions, you members will be able to check that out. But I'm gonna try to have some cutouts of trades so you could actually see what's happening and how you can determine what's likely to happen next just by reading price action. Okay, the indicators here, we'll talk about the moving averages, and everything else we'll kind of sum it up next week. So I hope this helps you guys out. I hope this gets you off to a good start. And like I said before, if you know anybody that this can help, forward it to them. And if you have any questions, always feel free to email me, ed@AverageJoeTrader.com, and I'll be glad to help you out. So you guys take it easy, and I will catch you tomorrow.